What is up? Let me get this volume up. Can you guys hear me okay? Hit me up in the chat. Let's make sure this is actually working. Let me know if you can hear me. Sound coming in good? We're good? Yes? All right. Awesome. All right. What is up, everybody? If I cough a lot today, I apologize, man. I have literally been... My wife and I have been literally struggling with some major throat issues for like a long time, over a week. And I'm finally to the point where I can actually talk. Look, like literally just 2 days ago, I literally sounded like a smoker. Like I'd been smoking for like 50 years. I didn't lose any weight. It's still there, man. Come on. You only looking at my neck. I have a skinny neck, Michael. I have a very skinny neck. I might have lost a couple pounds. Okay. So anyway, so I am feeling a lot better, but I am still dealing with some throat dryness. Michael, I don't like you anymore at all. That just hurt my feelings. So yeah, so let's go ahead and get started. So you guys asked about these lenses. A lot of people like them. I posted the link. You just got to scroll up. I did post the link. Filter Optics is the company that I buy my lenses from. So look, you can get these for dirt cheap on Amazon. You don't have to spend 190 bucks on these glasses. The reason why I like these is because this company actually makes glasses that actually look good on your face. Okay. A lot of the ones on Amazon, they're cheap. They're just there to give you the lens. Like you don't care what you look like, and that's fine. So it's up to you, like if you want to spend the money or not. You don't have to spend 190 bucks to have like protection for your eyeballs. So yeah, so if the link is there, I don't make a penny whether you buy them or not. I honestly don't care. You can go on Amazon and get a disgusting looking cheap pair that's going to work just as good. Okay. All right. So we got that out of the way. All right. So what I want to do today is we're going to do a market overview for crypto and legacy as well. We're kind of combine the two because a lot of the recent correction has been completely fear-based, based on narrative. And we've talked about narrative 1,000 times, but we're going to do that today. And then I promise before the week is out, probably on Thursday, I will do an altcoin madness video. I know that's all you guys care about. That's all you guys care about is altcoins. What like the other day, get the whole market's tanking and someone posts, what about TEL? What about TEL? Like, what is it you want to know? Or they'll go, what's wrong with TEL? The same thing that's wrong with the rest of the market. Everything is correcting. Like, but this is what I get. I get this all the time. Like, because the entire market is correcting. There's nothing wrong. Without there are some things that have, things wrong. Like we just saw a mantra coin absolutely get smoked due to some weird liquidation issues. I'm not even going to go into that. So it's not like bad things can't happen to coins, but overall, if your coin is correcting and nothing's been posted, it's probably nothing wrong with it. You just are waiting it out just like everybody else. Buy the dip. Like this is what I tell people. But anyway, so there's nothing wrong with tail. Okay. All right. So let's do that. And then Thursday, I think Thursday or Friday at the latest, I should be able to do a nice altcoin video. And we will talk about the XRP and the tail and all those other things that you guys want to see. Plus, we'll even talk about Fartcoin, which, by the way, it's the sign of the times. How can the most bullish chart, the most bullish coin of the last 2 weeks be a coin called Fartcoin? And yes, my elite were actually in Fartcoin. And this thing rocketed 130, 160%. I think right now it's like 130% up from our entry. Fartcoin, embarrassing that the most bullish coin right now is Fartcoin, and that's even a coin. But such is the nature of the meme scheme. So we're going to talk about all that Thursday or Friday. So I will do an altcoin madness video before the week is out. I promise. Definitely Thursday, possibly even as early as Thursday. So that is coming. So let's go ahead and talk real quick. We talked about, and you guys, you need to watch every one of these videos. So that way because what I'm telling you is coming to pass. It's actually happening. All the things I've told you. I said long before, even before it even came out, I said that the tariff war narrative, the initial narrative, would be a fear-based one, but that would not be the truth of the matter. And we saw it go from 30 countries coming and doing deals to 50 countries. Then it went to 70 countries. Right now, there's 130 countries lined up to do deals with the United States, 130. So, the last one will of course be China and the United States, the two big monster power heads. But even, we've got the European Union ready to do deals, in line to do deals. We've got India doing deals, new deals. So even all of the other bigger powers are lined up to do deals. And the number right now is 130 nations to do new deals. It was never, tariff war was the narrative. A narrative is almost always false. Okay, that was not what the intention was. The intention was, of course, to bring people to the table. We've discussed that. We've been on top of that since day one, before it even came out. We have, and it is happening literally as we speak. So all of a sudden, there's a shift to, maybe things aren't quite as bad as they were made out to be. And yeah, absolutely not. Absolutely not. I don't know why I'm looking down here. My camera's up here. I don't know. I'm just looking at myself. I don't know. So anyway, so all of that shenanigans is finally being, and now everybody's realizing, oh wait, maybe it's not quite as bad as we thought. However, those knee-jerk movements, you get to see them in the markets. And so I want to real quickly go through so you can see what's happened. We've seen all of this before. We had the same type drop for COVID, and people's like, that's different. All right. And I had somebody on Twitter come and say, well, that's completely different. Okay. Fear is fear. It doesn't matter what the narrative is. It's the same. So when it comes to markets, the reaction is the same. They are the same. They are parallel. Doesn't matter what you're entitling your narrative, whether it's COVID, whether it's tariffs. A fear-based drop is simply a fear-based drop. It doesn't matter what you call it. You can call it whatever you want. It's very, very, very visible, and the structure and the dynamic of the price action is the same. And I'm going to show it to you. All right, shall we take a look? By the way, thanks for joining me live, those that take the time to actually come and join live. I know a lot of people can't because they're working, they have to watch the recorded, but thank you for being here. I'm thrilled that you're here. I'm looking at your names in there. If you're here, say something in chat so I can see your name. I do like to look at the names in there. See Bobby making me feel better. Looks good on you. Thank you. William making me feel better, even though somebody else said I look like a skinny beanpole. Thank you. Thank you guys. I love you. All right, let's share screen and get this party started. I'm going to move y'all to my other screen over here. Michael, not skinny. All right, let's get share screen going. Let me get rid of that. All right, here we go. Real quickly, we're going to look at the three major legacy market indexes and then go to Bitcoin and Ethereum. All right, because everything that has happened in all the markets has been fairly correlated, but slightly not. Okay, slightly not in favor of cryptocurrency. Cryptocurrency has seen way more isolation to the reaction of markets against tariffs. All right, so let's go ahead and start right real quick. The first thing we have is the biggest index of all when it comes to stocks, and that is the Dow Jones. So I want you to see this here. So this is a COVID-based, look at this descent, okay? And you can always see fear because it's verticality. It's verticality, all right? This is verticality. These almost always do not represent entry into bear markets. They just don't. They just don't. And if you look at this, so this was 4 years ago. We had a 37% drop. This basically, this is a weekly chart. So each one of these candles is a week. This climbed out of that so quick. You got a double top here. One fake out drop, and then bang, off it went into the wild blue under. Now, I want you to notice the difference between this type of a drop and this one. Yeah, and this one right here. A much slower descent, not fear-based. A much slower descent. This one was from high to low, about a 22% drop. And then this went into this literally hung out down here from the high to the end for 700 days. For 700 days. Slow descent and 700 days. Fast descent and literally low to the breakout, 200 days. Do you see the difference? There's a big difference in what's actually happening in the market. All right. So we have what type of a drop here? A fear-based descent. Fear-based. Look at the verticality. Not slow, gradual, where all of the price action things that you want to happen are happening on the way down. No, it's just bang, fear into major demand. And you can see that reaction off of demand. Look at that buying candle there. Huge. So that's the Dow. I don't want to spend a lot of time on that, but I want you to see this across markets. We're going to do this again. This is the S&P 500, representing the 500 stocks listed in the S&P. What do we have here? Fear, COVID, verticality. I mean, almost instant recovery. Fear, tariff war. This isn't real. Okay, this stuff is not real. It's temporary. It's knee-jerk, fear-based stuff. All right? Right down to major demand, massive buying, and still holding the trend line back above the trend line. Versus this one, very gradual descent, and it taking longer. There's a big difference. There's a huge difference, people. And it's clearly, and you can see it in price action. You can see it in price action. Long time down here. $750 days. 750 days versus 195 days. Fear, a fear drop, which isn't real, as expressed by price action falling, versus something that's legitimate and takes more time to recover from and is a little bit more bearish in price action and in length of time. Excuse me. Oh, I am so sorry about the coughing. You're just going to have to forgive me. All right. So I do believe we see something more like this coming out of this. Now, this isn't going to, this does still take time to develop, but it's going to take less time than this. did. All right, and then one final, the big one, which is the NASDAQ, which is all the tech stocks or the risky stocks. Here it is. Once again, I just want you to see it. COVID fear, 32% dip. We've only got a 27% dip and everybody's lost their minds. It's the same on the Dow and the S&P 500. And everybody's, and what did everybody post on Twitter? We've never seen anything like this. We've never, and I'm like, dude, yes, we did just 4 years ago. And it was even worse. It was much worse. The drop was much worse. And the recovery super quick. This is what's called a V-shaped recovery. V-shaped. Why? Because this isn't real. It's fear-based. It literally is fear-based. Again, I think we're seeing the same thing here. It's not real. This even recovered a major horizontal. So you came down into the trend line and into major demand, and then bang, instantly recovered a major horizontal. So you're holding the high ground here. Recovered and is right now holding the high ground. 27% dip. Look at the volume on that bounce. Look at the volume. The amount of buyers that stepped in. Look at that. This volume bar right here on that candle. So versus this slow descent, come back up, test. You know, these are price action dips. Yeah, price action dips. These are real. Slow descent, breakdown, test, support, test resistance, breakdown, test resistance, breakdown. Takes a long time to recover. Again, high. This one's 800 days. 800 days before you get a new all-time high. Much longer lows versus V-shaped. I think we're going to be getting V-shaped here. Something resembling that. So I just wanted you to see that across legacy markets so you can understand. This is why I keep telling you. Narrative versus truth. Fear versus what's really happening. And fear gives you these type of dips. These type of dips. Real price action corrections and the ones that take longer look more like this. I've shown it to you on all three charts. Excuse me. All right, let's go ahead and get into Bitcoin because Bitcoin is at a really dynamic spot. All right, so I'm going to show you what we've got here. So you already know about this lower trend line. If you've been watching my videos, you already know about the bull line. All right, that's this line right here. We have not tested that inside of this structure. We could, but we don't have to test it this low. Like this could come around up here and then test it higher. It is a rising trend line. That means as we're moving forward in price, this price of this trend line is increasing. Does that make sense? But what we have right here is the descending trend line and Bitcoin potentially working on a breakout. Okay. So we have regained the structure of this area here. This was the bottoming structure, this area right here, before we got this final breakdown. This has all been recovered. So this structure here is intact. That's this structure right here. Yep. This market structure here is what is in place. So this could be forming our bottom. So that means this could come back down. You get your false breakout. This could come back down, test this support level, and then break out and to test this. This box is the topper range. All right. And the reason why it's like that is because of price action right here. This is where we got our temporary tops, not end of cycle tops. And I told you guys that. I've said it from the beginning. There was no distribution volume. And then I was able to prove it to you with on-chain data. I posted it in the channels where you actually got to see, proof. I posted proof that there was no distribution volume as seen in every other cycle top. That doesn't mean you don't have a temporary top. It's the same thing we did back here. I was one of the few. There was a couple others. I was one of the few that knew this was not the end of the cycle. There were many calling this the end of the cycle. But because we didn't have any what? Distributive volume. We didn't have any of that. We were able to analyze this and break this down into two halves. One, a profit-taking half. A profit-taking half. And then two, a reaccumulation half. Yep. Here's your profit-taking half. We entered a new phase of accumulation. Elite longed this from here, longed it all the way up to 100K. Again, we have a different type of top, not the same as this one. We have a short-term double top. We have a profit-taking section. And now we've entered a reaccumulation section. That's just how it is. On-chain is validating that it's being reaccumulated. The amount of Bitcoin that whales have is constantly increasing. The amount of Bitcoin on exchanges is constantly decreasing. There was never any distributed volume. Profit-taking volume is not end-of-cycle distribution volume. It isn't. And this is very easy to spot. So we're still watching this for final confirmation. I have not taken any leveraged Bitcoin as of yet because I'm watching this play out. This could still come down into this zone here. We need to see, this is what has to happen. This is the change of character. All right. You have a chach or change of character, and that is right here. Yep. Because as of right now, Bitcoin is in, and I drew this for you last time, is in a downtrend. In order for it to change and not be in a downtrend, you need the high before the lowest low to be broken. And that is right at 89, a little above 89K. So Bitcoin needs to finish bottoming. It's still in its bottoming zone. It needs to finish bottoming. It needs to break the 89K area, and then hold it as support. And that would put price into where? The topping range. And this would be very bullish. For Bitcoin to be back up in this area would be very, very bullish. So do we have final confirmation that this is done dipping? No, not completely. But we do have some nice signs down here. Bitcoin recovering this price action zone is very good. It's recovered this market structure, this lower area. And this is the accumulation structure. That is still developing. Make sense? Boom. Okay. Good. So we're still kind of letting the market be the market. Does that make sense? And then Ethereum, again, very defined downtrend. Very, very defined downtrend. We have the lowest low. So we go to the high that precedes that. And we have an Ethereum that needs to break 2100. 2100 to have a change of character or to reverse the downtrend. So how is that going to play out? I don't know yet. Right now, on the daily, we have a double bottom, but we could get a double bottom on the weekly. So is this going to hold up as resistance? This is the major resistance. This is 1750, guys. This level right here. I'm going to change the color of it to black. Right now, that is the major resistance. This has to break first and then hold up as support to have a shot at the chach or the change of character. Again, this stuff isn't going to just, happen overnight. This takes time to develop. This is what we're watching. Now, as we do get these things, and this does break 1750 and then holds it as support, and we see volume come in, we see real buying come in and real spot buyers, we can begin to to inch our way into active trades. But it's not until we truly break the chop and hold that as support. And just to give you an example of what that probably is going to look like. So we don't just need it to break, because many times these break out, but then if it leaves behind any liquidity, because breakout traders will buy this. Breakout traders will buy this. Breakout traders will buy this. But what will happen is if the whales have done it on impulse, then they'll come back and fill that liquidity. All right. So I want you to be aware that just because this breaks out and makes a chotch, it doesn't mean that it's not going to come back down here. If the whales leave any liquidity down here, then the odds are this will come back, grab that liquidity, and then you'll get your, something of that nature. Now, if you get your breakout, your chotch, and it has left no liquidity behind, then this could absolutely run and take off and start filling some of this liquidity from this area up in here. So again, it's are we there yet? No, we still need a lot more confirmation. If you look right now at the 4 hour, I can show you where the liquidity is. This right here, right below the major resistance, 1750, is an area of liquidity. And look how price hasn't grabbed that liquidity yet. It's kind of left it there. So I'm not going to get excited if just because this fills this liquidity, because there's a lot of money here. All right. Again, this has to break 1750. That's this level right here. This has to break and then hold as support. That's what has to happen. And again, if it doesn't, it's on impulse, then whales will probably pull this back and grab whatever liquidity they left. And this is what you'd want to see. Yep. And we can head towards that chotch or towards that change of character. Now, I do like this formation down here. I do like this formation. I do like the volume and the accumulation that we're seeing down here. And this does have some sense of bottoming. And this did not leave equal lows. So this did grab liquidity on this final low here. You know, if these were an even level, I don't like even levels, because even levels make for external liquidity spots or places where people have their stop losses. So I do like this, but this still has to play out and develop. Yeah, it's that simple. Yep. So yeah, that's pretty much the markets in a nutshell. We are watching markets do what? Confirm. We need them to confirm. We need them to confirm that the lows are in. We need to confirm that they are, in fact, forming bottoming patterns. And what I do like is that we are seeing a significant number of not just bottoms forming on altcoins, but we're seeing a lot of them start to push and make higher highs. And this is very, very good. It's not in a broad context yet, but we are starting to see that on a lot of coins. And that's what we're going to talk about later this week when we do altcoin madness. It's that simple. Yeah. So right now we're kind of letting the market be the market. Any trades taken in this type of market is very high risk because you don't have a lot of confirmation yet. You want that confirmation, and then you inch your way in. You don't go all in. You inch your way as you begin to see. Yeah. So Steve, yes. Vault coins, vault items. Yes, absolutely. You should be accumulating those at will, basically at will, especially items like Link. You guys know my view on Link. Link is very quickly, without a doubt, there's no debating it. No one can combat it. I wouldn't even accept an argument with anybody. Link has become the godfather of crypto, period. By nature of the fact that everybody and their mother and their brother and their government and traditional finance is going to have to use them in every way, shape, and form. Yeah, I mean, Link is a triple digit, probably eventually a 4-digit asset. eventually. I'm not saying right now, but it is by nature what it is. So we have a lot of mega events coming up over the next several months that are going to be happening. And they're all positive and they're all pro crypto in every way, shape, and form. You cannot stop what is coming. Till next time, baby. Here comes the boom. I lost my stop video button. There it is. Love you.